Hello, everyone. My name is Moe and welcome to another episode of Income Investors. With me today is John Whitefoot, but before we go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Investing comes with risk. No matter how safe an investment sounds, it comes with risk. To read more about it, please see the description below. Today, we're going to be talking about Blackstone Minerals LP. It's traded on New York Stock Exchange under symbol BSM. It is one of the largest pure play oil and gas, mineral, and royalty owners in the US, and its shares are doing really well. They're up 21% in 2023, but the industry tailwinds point to a bigger pain over the coming quarters. John, are you there?
Yeah. Hey, Mo. Yeah, you're exactly right. As you noted, Blackstone Minerals is the largest pure play oil and gas, mineral, and royalty owners in the U.S. Its diversified asset base is concentrated in the Permian, Haynesville, and Bakken basins. As a mineral company, it has exposure to oil and gas, but without the hassle of operating costs or capital spending requirements. And thanks to its scale, Blackstone has opportunities to partner with operators to initiate or accelerate drilling, which directly benefits and they directly benefit from that technological advancements, which helps increase recovery and well economics. And there's plenty of well and oil and gas reserves to help keep investors happy. Estimated proved oil and natural gas reserves at year-end 2022 were 64.1 million barrels of oil equivalent, and that's up 7% from 2021.
John, oil and gas has been one of those sectors that has done really well. No matter where you look, you're seeing stellar gains. What's happening with Blackstone Minerals LP regarding their earnings? As that oil price has it helped?
It's based more on their operational activity. Blackstone was able to report record fourth quarter and 22 financial results. I'll just throw some numbers at you, but not too many. Okay. Fourth quarter mineral and royalty production increased 7%. to a record 42.1 million barrels of oil equivalent. Net income was up 36.5% year over year at a record 183-ish million. Adjusted EBITDA was a record. Distribution cash flow was a record. And during the quarter, the company announced a 0.475 per unit distribution, which represents a 6% increase over the 0.45 cents per share paid out in the third quarter. And that's just the fourth quarter. In the full year 2022, mineral and royalty volumes increased 4% year over year. Net income was 476.5 million. Adjusted EBITDA was 466 million. The company also increased its cash distribution by a whopping 85% to $1.745 per unit. And to top it off, Blackstone actually paid down $79 million of debt.
And how are they doing in 2023? It hasn't been the greatest year for energy plays so far.
No, energy stocks haven't been the biggest winners this year, but yeah, despite headwinds and weaker natural gas prices, Blackstone kicked off 2023 with a strong quarter. The company reported net income of 134.4 million compared to a net loss of 7 million in the same prior year period. Distributable cash flow was 104.1 million, and I think most importantly, the company ended the quarter with zero debt and 66 million in cash.
Okay, those are decent results. And earlier we talked about tailwinds in the industry. What are some of the growth opportunities here at Blackstone Minerals?
Yeah, there's lots of opportunities for continued growth and additional record results. Oil is trading at around 70 per barrel, well below the 130 level back in March 2022. But there are more than enough positive factors that could propel oil back to the triple digits. First, OPEC Plus just reduced its output by around 1.5 million barrels per day. It meets again in early June, and there's expectations that it could announce another production cut, with Saudi Arabia's energy minister hinting that additional cuts are actually on the way by warning short sellers to watch out. Goldman Sachs also raised its 2023 price forecast for Brent crude to 95 from 90. The bank also raised its Brent crude forecast for 2024, with prices expected to hit about $100 per barrel. And that's just oil and gas. As for natural gas, they're bearish right now, down from their August 2022 highs of $10.02 per million British thermal units to around $2.48 per million British thermal units. But the longer term outlook remains really bullish. According to the Energy Information Administration, increasing exports of U.S. liquefied natural gas through 2050, way off into the future, will raise domestic oil prices for natural gas. Over the near term, industry analysts expect prices to average $3.23 this year before rising to $3.71 next year, and that represents a 50% increase over current levels. On top of that, the EIA said that overall gas exports will become the biggest components of U.S. natural gas demand by the early 2030s. Right now, U.S. liquid natural gas export facilities have an operating capacity of 11.4 billion cubic feet per day, but that number is expected to more than double over the coming years. Right now, there's a further 7 billion cubic feet per day under construction, and another 18 billion cubic feet per day of capacity that's been approved.
Now, John, the fun part, what's happening with the distributions here?
Well, yeah, throwing off lots of cash and having zero debt is the best case scenario for yield hogs. As noted previously, during the fourth quarter, the company increased its payout 6% to 0.475 per unit. It maintained the payout in the first quarter. The 0.475 distribution represents a 19% increase over what was paid out in the first quarter of 2022. And this works out to an annual distribution of $1.90 per share for a current yield of 11.9%. That's well more than double the current inflation rate of 4.9%, which is significant.
John, thank you so much for talking about Blackstone Minerals LP. It's traded on New York Stock Exchange under symbol BSM. It is one of the largest pure play oil and gas minerals and royalty owners in the US. Because of its massive footprint, it has been able to generate serious cash flow, report strong financial, and growing ultra high dividend yield. In fact, thanks to its strong cash flow, it has been able to reduce outstanding debt from $394 million in Q4 of 2019 to zero in the first quarter of 2023. Going forward, look for Blackstone to benefit from sustained recovery in natural gas and ongoing demand for oil. This should help it continue to deliver solid return on capital and returns strong cash flow yields to investors. Thank you so much for watching another episode of Income Investors. If you want to read more about John's ideas, you can go to incomeinvestors.com. We'll be back with another video soon. In the meantime, don't forget to like this video and subscribe to our channel.